Ethereum is looking ready for new weekly highs, and in today's video I will be providing you guys with a beautiful long trading idea on Ethereum. Before we dive into the charts and before we dive into the exact execution, I want to talk with you guys about the weekly statistics for Ethereum and why these weekly statistics for Ethereum are giving us a beautiful bias for new weekly highs. Now first, let's have a look at the weekly distance statistics, in which we can see that the weekly distance statistics are showcasing a very interesting metric right over here. It's showcasing a percentage of 97.9%, so the odds are 97.9% that we are going to get a bigger move compared to the current move that we have seen so far this week from P1 to P2. What does this mean? It means that so far the weekly P1, aka the weekly low over here, towards the weekly P2, aka the weekly high over here, so far it has been a move of, let's measure the exact move, of approximately 6.5%. Now the metric that I just showed you guys, which was almost 100, is showcasing a 97.9% chance that we're going to get a bigger move compared to the current move that we have seen so far this week. So that means that either there's a 97.9% chance that we're going to take out the weekly high this week, or there's a 97.9% chance that we're going to take out the weekly low this week. Now since we first put in the weekly low over here and afterwards we put in the weekly high over here, there is a higher probability to first take out the weekly high before we would take out the weekly low. So there's almost a 100% certainty that we are going to get a bigger move compared to the current move that we have seen so far this week, which basically means, and is basically providing us with a beautiful edge, that there's a very high probability to make a new weekly high either today on Friday or Saturday or on Sunday. We can also see that we put in the weekly low on Monday during our 0 over here, and then we put in the weekly high on Monday during our 16 over here. Now when we move to the weekly timing statistics and we fill in that we put in P1 on Monday and P2 on Monday, we can see that the P1 that we formed on Monday, aka the weekly low that I just marked out, has a 94.9% chance to hold. So it almost has a 100% chance to hold. On the other hand, the last time that we formed the weekly P2 on a Monday as well is 41 weeks ago. So that is over 10 months ago, guys. That's a very, very long time. So that almost never happens. When we look at the probability of the Monday high and weekly high to hold, so the pivot 2 for the week to hold, it's only a 2.6% chance for the weekly P2 to hold. That is an extremely low probability. It is much more likely to form the weekly P2 on Friday, Saturday or Sunday when we look at the percentages over here. So we have a very high probability based on the weekly timing statistics as well to hold the current weekly low and to take out the current weekly high. So what does this tell us? It tells us that there's a very high probability to either today on Friday or Saturday or on Sunday to get a push towards the upside and to go and take out that weekly high over here. And this is providing us with a massive bias and a very nice first day profit target, which means that I prefer to look for longs on Ethereum. Now what we were seeing as well, besides these weekly distance and timing statistics, is that price action is confirming this bias, because I really like the way that we were forming this piece of price action over here. Now have a look at the piece of price action that was forming over here. What we were seeing is that we first formed a fake break of structure to the downside over here. Why is this a fake break of structure? First off, the low that we break through is insignificant, and second of all, we didn't open and close any candles beneath this low. We only closed one candle below, and then the next one we closed above again. What happens because of this piece of price action? People start shorting the breakdown, thinking that this is a valid break of structure. Where are those people placing their stops, or the people that short the pullback? They're going to place their stops above this high. So we take the stops above that high, put in a swing failure right there. Once again, people identify this push up where we sweep the high as a valid break of structure, not realizing that's actually a fake one. Once again, people FOMO into longs or up on the pullback. And where are those people going to place their stops? Exactly, they are going to place their stops beneath the low over here. Now look how we push the price towards the liquidity pool, where we start mitigating that liquidity pool right over here. This is where smart money fills the order. We confirm the deviation and we reclaim that pivotal low. Now along the way towards the downside, we can see that we were forming a local downtrend as well, right? Where we were forming constant lower highs and lower lows. Over here we form another lower low, lower high, and then another lower low. After forming that lower low, we push towards the upside, and we can see that we broke structure based off this significant high that brought us to that lower low, confirming the trend reversal. Now, what we could see as well is that over here we broke through another high, and the local trend is back towards the upside. We have a clear drawn liquidity. Statistics are confirming our bias as well. We have mitigated a massive liquidity pool right over here, so we should be targeting higher levels. Now, what I really liked is this local piece of price action right over here, and I'll explain to you guys why. When we go to the 10-minute time frame, or maybe even a 5-minute time frame, we can see that before we started this impulse towards the upside, over here we saw some clean price action as well. Fake break of structure, engineers local liquidity over here. We mitigated liquidity pool, and then we push up, giving ourselves a valid break of structure over here. Now, this piece of price action, where there was demand coming into the market for this impulse towards the upside over here, provides me with a nice potential low to hold and a nice potential invalidation for my bullish bias, and also for the long position that I'm looking to enter. Now, we know that besides the invalidation and besides a target, which is a new weekly high that we discussed at the beginning of the video based off the statistics, we also need to make sure that we are going to execute the trade and that we are going to find an entry. Now, you know that we always want to enter where other people are going to get stopped out. And when I look at this local price action over here, we can see that it's very choppy. And a lot of people have been getting wrecked, and probably some more people can get wrecked before we get that actual push towards the upside. And what I can see over here is that we are getting this fake break of structure, and we are getting this fake break of structure. Once again, we are breaking through insignificant highs. When we analyze the structure, we can see we form a low, a higher high, a lower low, a higher high, and then we form a higher low over here, right? So everything that we do over here is insignificant until we take out the low over here. There are no new significant highs being created, which means that this is a fake break of structure, and also that this is a fake break of structure. What are these fake break of structures doing? They're engineering liquidity beneath this low over here, and also beneath this low right over here, which means that you guys know that I always want to enter where other people are getting stopped out. So I'm only interested in entering once we take out this low, or once we take out this low. Now, I found my invalidation over here, and I found my first take profit target over here, but eventually I'm going to target some higher time frame buy side liquidity, which is going to be this second to highest high right over here, which is my main take profit target for this long idea on Ethereum. So when I go to the actual execution of this trade, we can also see that if I flip on the EMAs, now we have some beautiful alignment of the 15-minute 100 and 200 EMA beneath that first low that I want to take out. And also when we go to the 1 hourly time frame, we can see some beautiful alignment of the 100 EMA beneath our second entry point. So some lovely alignment of the EMAs as well with our trading idea. When we start looking at the current week fixed range volume profile, when we start on Monday and we drag it towards the current hour, we can see that beneath that second entry is also where we have the value area low aligning exactly with our entry point. So what I'm looking at is to take out either one of those lows, and that's where I'll be looking to enter my long with my invalidation over here, first take profit target over here, and second take profit target over here. So the final execution would look something like this, where we take out either this low or where we take out this low to hit our second entry as well. As you guys know, I always work with second entries as well, and then after hitting our entry, I'm waiting for a reversal, and hopefully we push towards the first and also towards the second take profit target to lock in some beautiful gains on Ethereum. From off the first entry, this is an RR of 3.5, and from off the second entry, this is an RR of 7.5.